Good morning students, welcome to SST So Simple tutorial. In the previous class, we read about credit and its role, both positive and negative. We saw how credit helped Salim to increase his earnings and also saw how credit pushed Swapna into a debt trap. Today, we will discuss the terms of credit. Terms of credit refers to the conditions that are attached to a loan. These may relate to rate of interest, collateral, documentation required, and mode of payment. All these things are discussed and finalized before a loan is given. At what interest rates the borrower is accepting the loan is clearly specified in every loan agreement. Accordingly, the borrower pays the interest besides the principal amount. Then comes the collateral. This is a new term for you. Collateral is an asset that the borrower uses this as a guarantee to a lender until the loan is paid. If the borrower fails to repay the loan, the lender has the right to sell the asset or collateral to obtain payment. Properties such as land titles, deposits with banks, livestock are common examples of collateral used for borrowing. Then the lender may ask for certain documents to ascertain few things. If you go to a bank, the first thing they will ask today is your Aadhaar card as an ID proof. Lenders may need to know how sound is the financial condition of the borrower. They may like to assess the repaying capacity of the borrower. To verify these things, they may ask the borrowers the salary slip of the office or the organization where they work. Sometimes they ask for the bank statement to see how much money the borrowers have in their account and a list of all activities in a particular period, say 6 months, including deposits and withdrawals. To the self-employed, they may ask for the income tax returns filed by them. The mode of repayment is also important. This means how the borrower has accepted to pay back, monthly, quarterly, half-yearly or yearly. Let us see an example shown in the book. A house loan. Megha has taken a loan of rupees 5 lakhs from the bank to purchase a house. The annual interest rate on the loan is 12% and the loan is to be repaid in 10 years in monthly installments. Megha had to submit to the bank documents showing her employment records and salary before the bank agreed to give her the loan. The bank retained as collateral the papers of the new house, which will be returned to Megha only when she repays the entire loan with interest. So now we have to fill up the blanks. Let us see your understanding. So the first is loan amount. So how much is the loan amount? The loan amount is rupees 5 lakh. The next, duration of loan. So the duration of loan is 10 years. Documentations required. So what are the documentation required? There are employment records and salary slip. Next, interest rate. So the interest rate is 12% per annum. Next is your mode of repayment. The mode of repayment is monthly installments. Next, collateral. What is the collateral here? The paper of the new house. I hope you have understood this. The terms of credit varies from one credit arrangement to another. This also depends upon the nature of lender and the borrower. This will become clear when we read variety of credit arrangements. Rohit and Ranjan are two boys who just read the terms of credit. They want to know the credit arrangements that existed in their area. That means who were the borrowers, who provided the credit, what were the terms of credit. So they talked to some villagers. Here you will find 3 different kinds of borrowers. The lenders are not the same in the 3 cases. The terms of credit are also different. So first they meet Shyamal. He has 1.5 acres of cultivable land. That means he is a small farmer. Shyamal borrows money from the village money lender. The rate of interest charged to him is 5% per month or 60% per annum. Shyamal has to pay back only after the crops are ready for harvest. There is one more condition. Shyamal has to sell the crop to lender only. This way, the trader ensures that the money is repaid promptly. Also, since the prices are low during the harvest, the trader makes a good profit by buying the crop at a low price and selling it when the prices go up. Rohit and Ranjan next meet Arun. He has 7 acres of land. So we can say he represents a medium farmer. He takes the loan from a bank. He gets the loan at the rate of 8.5% per annum, which can be repaid anytime in the next 3 years. Arun is a smart guy. He plans to repay the loan after the harvest by selling a part of the crop and to keep the rest of potatoes in the cold storage and apply for a fresh loan from the bank against the cold storage receipt. The two boys next meet Rama, who is an agricultural laborer. Unlike Shyamal and Arun, she is landless. There are several months when she has no work. As a result, she has to take loan to meet her daily needs. Sometimes sudden illness in the family or functions are also met through loans. The lender is a landowner. He charges a very high rate of interest, 60% per annum from this poor woman. She repays the money by working for the landowner. Most of the time, she has to take a fresh loan before the previous loan has been repaid. She is exploited by the money lender. So depending upon the credit arrangements, Arun only is going to have a higher income from cultivation compared to Shyamal. I hope you have understood this topic, variety of credit arrangements. In the above case, we saw that Shyamal took loans from the village money lender. Arun took loans from the bank. Rama took loan from the landowner. In addition to these, people in rural areas also take loans from cooperative societies. The cooperative society is a voluntary association of persons who join together with the motive of welfare of the members. The aim of the cooperative society is to protect the economic interest of members in the face of possible exploitation from people like village money lenders who desire to earn greater profits. The capital of the society is raised from its members. It accepts deposits from its members. With these deposits as collateral, the cooperatives obtain a very large loan from the bank. These funds are used to provide loans to members. Krishak Cooperative Society is one such society which provides loan for the purchase of agricultural implements, loans for cultivation and agricultural trade, and for a variety of other reasons. With this, we finish the topic planned for today. We saw that the interest rate, collateral, documentation required, mode of repayment together comprise the terms of credit. We also saw the variety of credit arrangements and the cooperative societies as a cheap source of credit. In the next class, we will read formal and informal sources of credit. Till then, keep reading. Have a nice time. Thank you.